On behalf of the government and people of Dominica, I am delighted to welcome all of you, and especially my colleague members of the Monetary Council, to Dominica, the Nature Isle. I am aware that this meeting takes place over one day, and the limited time does not allow you to take full advantage of the country's unique attributes, such as our hot sulfur baths that will rejuvenate your body and soul. I still invite you to do so if at all possible. And of course, it can be open at 3 o'clock in the morning or 12, so whatever time. Today, for the second time, I assume with humility the chairmanship of the Monetary Council. Let me begin by thanking the outgoing chairman, Honorable Gaston Brown, for his sterling service over the past year. I intend to build on this very good work during my chairmanship. Ladies and gentlemen, the ECCB has advised that the outlook for the ECCU economy is generally positive. The global economy continues to demonstrate a modest recovery. Accordingly, global growth for 2017 and 2018 is projected at 3.5% and 3.6%, respectively. In parallel, growth for our currency union is projected at 3.2% in 2017 and 3.1% in 2018. Tourism and foreign direct investment, particularly through citizenship by investment programs, are and will continue to be the main drivers of this performance. In the case of Dominica, we are keenly aware of the importance of the citizenship by investment program in financing critical infrastructure in the aftermath of Tropical Storm Erika. Moreover, the CBI is critical for transformational projects such as geothermal development and the construction of our international airport. While a positive growth outlook is welcomed, the current outlook is well below our 5% annual growth target required to address key macroeconomic objectives such as full and meaningful employment and a more equitable distribution of the benefits of growth. We see a future of strong banks, vibrant economies led by tourism, agriculture, medical education, financial services, and powered by technology. We see a future where our citizens can find or create decent and meaningful work. We see a future where our children can grow up to realize their God-given potential. We see a future of peace, stability, unity, and prosperity. Ladies and gentlemen, securing the future we want for our region demands our commitment to nothing less than economic transformation. For this reason, the Eastern Caribbean Central Bank has set economic transformation as the focus for its strategic plan for the period 2017 to 2021. In September, the bank will formally launch its strategic plan. I commend the governor for his foresight to commission the preparation of this plan and the senior management and other staff for ensuring that the plan was completed. I look forward to very strong results. The process of economic transformation is not a sprint. It requires, inter alia, a solid foundation, an appropriate infrastructure, a strategy, resolute implementation, and patience. Above all, it requires bold, courageous, creative, and caring leadership. In this regard, the Monetary Council is fully committed to playing its part. It is with this high level of commitment and with the eagerness to make life better for citizens of the Eastern Caribbean Currency Union that I assume the chairmanship of this council. From the vantage of the Monetary Council, there are three key economic challenges at this time. One, strengthening the stability of the financial sector. Two, addressing the deficiencies in the flow of credit to key economic drivers. And three, enhancing long-term growth potential and competitiveness. Over the next year, the focus will be on addressing these challenges. Arguably, the most significant challenge to banking in the ECCU at this time is the practice of de-risking by correspondent banks. The central bank, in collaboration with key partners, will continue its strong advocacy to preserve correspondent banking relationships in the ECCU. These relationships facilitate essential banking services, such as wire transfers and cross-border credit and debit card payments. Without these services, our trade would be disrupted, our economies would be crippled, and our development would grind to a screeching halt. De-risking is a major concern for every country and for every bank in every country. However, in our region, it is the indigenous banks that are at greatest risk. I issue a call to all the citizens of the ECCU to adhere strictly to the guidelines provided by the banks, and to ask also that we do not use social and other media to disseminate stories that could affect how our regional banks are viewed by the international community. We have to work together to ensure we put an end or halt the process of de-risking in our region. This cannot and should never be seen as a political issue. In order to strengthen financial stability, the Monetary Council over the next year will pursue an ambitious agenda of reforms. I now highlight some of these reforms. The full operationalization of the Eastern Caribbean Asset Management Corporation, ECCB. The issue of high non-performing loans in our banking system was a critical one. The ECCB is the entity established to lead the efforts of the region in that regard. The ECCB will serve the dual purposes of, one, managing the receiverships of the resolved banks in Antigua and Barbuda and Anguilla, and two, acquiring distressed loans from other ECCU banks. The ECCB legislation has been passed in all the ECCU member states. Critical staff has been engaged, and a strategic plan for the corporation is being prepared to ensure that the objectives of the corporation are met. Amendments to the new Banking Act. The new Banking Act is in place in all ECCU states. There are areas of concern identified by both the ECCU Bankers Association and the Central Bank. Addressing these will require amendments to certain sections of the Act. Undoubtedly, these amendments will further improve the regulation and supervision of the banking sector. Amendments to the Anti-Money Laundering and Counter-Financing of Terrorism legislation, AML-CFT legislation, to improve the AML-CFT supervisory regime in the currency union. The key provision will be conferring the powers of supervision for AML-CFT to the ECCB for all entities licensed under the Banking Act. This move will strengthen the region's negotiation to preserve correspondent banking relationships and to find solutions to the serious threat of de-risking or loss of correspondent banking relationships. Completion of preparatory work for the establishment of the Credit Bureau to provide credit granting institutions with a better means of assessing credit risk. The Credit Bureau will address the issue of asymmetric information and accelerate the speed with which credit applications are processed. It is the expectation that the Credit Bureau will contribute not only to better credit quality, but also financial stability. Preparatory work for the establishment of the Eastern Caribbean Appraisal Institute, ECCI. The ECCI is being designed to improve the region's capacity to properly appraise assets that are used to provide collaterals for loans. At present, there are no regional standards on which financial institutions, such as banks and credit unions, can rely for the valuation of real estate, including residential and commercial mortgages. Indeed, the recent challenges in the banking system revealed that some of the collateral backing non-performing loans were overvalued. This finding meant less than adequate provision levels by the banks and created an urgent need for these banks to augment the capital. Significant efforts are now being made to improve the region's real estate appraising capacity, such as minimum appraisal criteria set by the Eastern Caribbean Central Bank and the formation of a committee of appraisers drawn from each member country to develop appraisal guidelines for banks. Preparatory work for the establishment of the Eastern Caribbean Financial Services Commission. The ECFSC is proposed for improved monitoring of regulated institutions such as insurance companies, pension funds, and other non-bank financial institutions for systemic and individual risk that could impact either the wider financial system or individual institutions. It should be noted that this commission will not cover international financial services or offshore services. In addition to these reforms, the Monetary Council will encourage, consistent with the 8-point stabilization program approved in 2009, the amalgamation and consolidation of national or indigenous banks. Operating within undiversified economies and small markets, particularly in the post-global financial crisis era, has contributed to the challenges confronting our indigenous banks. These challenges include issues of capital adequacy, operational efficiency, profitability, and returns on investment, risk management, corporate governance, and correspondent relationships. Within the financial system, a process of consolidation is underway as financial institutions respond to the rapidly changing operating environment. The indigenous banks in ECCU will benefit from a proactive response to these global realities. The consolidation of the indigenous banks is expected to result in stronger, more stable indigenous institutions, which will be better able to treat several issues that currently confront small, standalone indigenous banks, such as 1, loss of correspondent banking relationships, 2, containment of compliance costs, 3, raising and maintaining capital, 4, rollout of new technology-driven services to satisfy changing and rising customer expectations. The trend towards consolidation is already evident in other sectors of the financial system, particularly the credit union sector. The success of credit union amalgamation in Dominica and St. Vincent and the Grenadines are well known. I will say to you, as the Prime Minister of Dominica, I fully support the amalgamation of indigenous banks in the ECCU. It is in our benefit, and we have to pursue it with speed and a determination to conclude on those arrangements. Given the criticality of financial stability and the importance of national banks, the Monetary Council has mandated the ECCB to commence a regional conversation on this issue of bank consolidation and amalgamation. We cannot speak about sovereignty, and we have had the bank for many years, because if we continue as our own little banks in our different islands, we run the risk of being washed away on the Atlantic Ocean. To facilitate this conversation and expedite the process, the ECCB will engage all indigenous banks as well as publish a consultative paper later this year. It is recognized that the structure of the indigenous banks vary from country to country. I therefore urge board of directors, shareholders, as well as bank management to recognize the importance of this matter and to treat with it as an objective a manner as possible. Ladies and gentlemen, time is of the essence on this matter, and I say no more. The stability of our region to generate foreign exchange earnings through competitive export sectors is critical, not just for monetary and exchange rate stability, but ultimately for economic transformation. This means that we must urgently address the growth and competitiveness issues in our currency union. In that regard, to that end, the Monetary Council will support the implementation of the action plan emanating from the Growth Dialogue, which was held in March of this year. Some of the recommendations include identifying the contributions of each country to the ECCU growth and jobs target, building our human resource capacity by revamping the education and human resource development system, broadening regional money and capital markets, including more saving and investment options, and developing regional and national infrastructure for reliable and sustainable air, land, and sea transportation. Evidently, the ECCB will need to work very closely with the OECS Commission and member countries to implement this action plan. Going forward, the bank will support programs for improving access to finance by micro, small, and medium enterprises via instruments such as the Eastern Caribbean Partial Credit Guarantee Corporation. My only concern with this is that I believe the World Bank should give a little more money to us to have this partial credit system, but as little as it is or small as it is, we can start with it. I am convinced that if our economies are to grow at faster rates, productivity of workers must be improved. I trust that through the engagement of the social partners, that we can develop mutually acceptable plans to increase output. In conclusion, ladies and gentlemen, securing the future we want demands nothing less than economic transformation. To that end, transformative reforms are essential, a few of which I have highlighted today. I record my appreciation of the Monetary Council, Board of Directors, Governor, management and staff of the Central Bank for their commitment to the regional cause and their hard work. I look forward to the coming year with hope and optimism. As a regionalist, I fully understand the power of solidarity and collective action. Accordingly, I invite us to join hands as together we confront and conquer the challenges before us. I want again to thank, on behalf of Council members, the distinguished leadership provided by our esteemed Prime Minister of Antigua and Barbuda, and to say to him that when the going gets tough during my tenure, I will certainly visit Antigua and Barbuda. Distinguished ladies and gentlemen, colleagues, friends, I thank you for your courtesy of listening to me. Thank you.